Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a post-FOMC rate decision look at the markets. What we know is that the Federal Reserve raised by 50 basis points. What the market is focused on, however, is the dot plot was raised to 4.6% from 5.1%, and in 2024 it was raised from 3.9% to 4.1%. So the Fed sees a higher terminal rate than the market was expecting, and that is weighing on stock prices a little bit, also leading to the dollar move higher a little bit as well. But it's not a disaster so far. So let's get into the markets. We'll start by taking a look at the euro versus US dollar. We're going to look at the daily chart first. And if we look at this chart here, I outlined this area between the 1.0594 level, that was the high price from early December, up to 1.06402. Those levels correspond with swing levels going back in time here, looking at these things like these highs and lows through here, and this high right here, and then we moved above the levels here, and then moved below the levels here, and then rotated to the downside through here. And the market moved up to that area in December, and then broke above it in trading yesterday, and we traded above the level, and we're trading above that level when we came into the FOMC rate decision. But as you can see, the price has moved back within the swing area here, but it's staying within the swing area. In fact, the low for the day near the 1.0618 level is remaining intact so far. So that is somewhat good news. And in fact, if we look at the price now, it is currently trading at 106.54. So the dollar is a little bit higher, but not. It's keeping its bullish bias here. We're going to need a move below the low for the day at 1.0618, I think is the low, and then below the low price in the swing area between 1.0594 or at 1.0594 to increase the bearish bias. Absent that, and the buyers are still in control here for the euro versus US dollar. So off the highs, but maintaining support. Let's take a look at the dollar versus yen, and again, I want to take a look at the daily chart in this currency pair, and we've been trading above and below the 200-day moving average, and we're currently above that moving average. After the move, we started the move right at the Fed decision time. The market was trading at 134.81, and we're currently trading at 135.61. So we are higher, and we move back above the 200-day moving average at 135.35. So if the price can remain above that level, that would keep the buyers more in control. We're currently trading at 135.63 as we speak. So there is somewhat of a little bit more bullish bias here in the dollar versus yen, with risk down to a break back below the 135.35 level. Let's take a look at the sterling versus US dollar. And for this currency pair, the pound sterling was trading at around 134.31. We're 31 going into the release, and we moved down to a low price that took the price to 124.31. It took the price down to a low of 123.61. But as you can see, the price has moved back up, and we're currently trading at 123.87. Now, the low price that we saw come down again came down to 123.41. That stayed above this swing area here, the swing area defined by different highs and lows going back to the month of May and June and July, through here and through here and here and here and here, here, before rotating to the downside, and we came up to that level in early December, and we moved above it the last two trading days. So staying above that level is more, it keeps the buyers more in control. We'll see if that price can hold support there against the 43 level on the downside, 123.43. On the top side, the 61.8% retracement held for the second day in a row near 124.51. That is going to be the level that we're going to need to get above in order to increase the bullish bias. So right now, the sellers are trying to push down into the swing area. We'll see if they can push further in that directional bias, and if so, if they get below the 43 level and then below the 120.278 level, that would be more bearish for the sterling versus US dollar. Let's take a look next at the dollar versus Canada. I'm going to take a look at the hourly chart in this currency pair. Why? Because the price is moving up and testing the 200 and 100 hour moving averages. The price moved right up to the 100 hour moving average of 136.039 and backed off, currently trading at 135.74. The 200 hour moving average is 135.91. These are the levels that we're going to need to get to and through if the price is going to move higher. So if we can't get above those levels, the bias from a tactical perspective remains more to the downside. So that's where we sit right now. Traders who want to buy a dip might look at this area right through here at around the 135.60 level as a level to buy on a dip. And if the price should bottom against that level and move back above the 38.2% retracement, move back above the 200-hour moving average, I would be more bullish for this currency pair. But right now, the sellers leaned on the first move to the upside. We'll see if they can continue that momentum to the upside. Again, watching on the downside the 135.60 level for support. That's this level right through here for the dollar versus Canada. Let's take a look at the Aussie versus US dollar. Again, we'll look at the hourly chart for this currency pair. And what we saw is a sharp move to the downside here. That move to the downside took the price below this swing area near the 0.6850 level. That's this level right through here. That level held was a high going back to December 5th and was at the low price that we saw in trading here after the break back to the upside. So good support there was broken, and this level would need to be broken back on the top side if the buyers are going to take more control in the short term for the Aussie versus US dollar. On the downside, the 38.2% retracement of this move up from this low to this high right here comes in at the 68.07 level, and then we have the 100-hour moving average also in play on the downside on further selling pressure in the Aussie versus US dollar. Finally, let's take a look at the New Zealand versus US dollar. And again, we'll look at the hourly chart for this currency pair, and it is testing its 100-hour moving average. That 100-hour moving average was tested on prior days, in fact, on Monday, right through here, and on Tuesday, again, right through here. And now it's Wednesday. The moving average is higher, and we did dip below that level at 0.64109, but moved back above the level, currently trading at 0.6417. So watch the 0.64109 as a level to get to and through with momentum. If we're able to get below that level, we have other levels to target, including the low price at right here that is near the 200-hour moving average. That's a green line in this chart at 0.6382. That getting below the 200-hour moving average would be more bearish and would be the next key target to get to and through if the sellers are to take more control in that currency pair. So in the U.S. Stock market, we are seeing the S&P down only around 19.58 points, or minus 0.49%. Was a little higher going into the number. The NASDAQ index is down 78 points, or minus 0.7%. And the Dow Industrial Average is currently down around 108 points. In the Treasury market, the 2-year yield is up about 5 basis points to 4.278%. Not too bad, actually. 10-year yield is up 3.5 basis points to 3.53%, and the 30-year is up to 3.549%. That's up 2.2 basis points. So given the fact that the Fed, the market was pricing around 480, 485, and now the Fed is up to 510 or thereabouts, that is that's pretty good in my mind for that for interest rates. So there you have it. A look at the markets. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.